The S&P 500 experienced a turbulent week, starting with optimism, but ending on a sour note. The initial rally was fueled by hopes of easing trade tensions. However, President Trump's unexpected tariff announcement on Thursday triggered a market downturn. The index, which had been on track for a second consecutive week of gains, ultimately closed the week with losses. This roller coaster ride underscores the delicate balance of factors influencing investor sentiment. Despite the late week slump, Monday's trading session saw broad market gains. The S&P 500 surged by 1.76%, reaching 5,767.57. The Dow Jones Industrial Average followed suit, rising 1.42% to close at 42,583.32. Tech stocks also flourished, with the Nasdaq Composite climbing 2.27% to finish at 18,188.59. The early week optimism was attributed to positive economic data and corporate earnings. Investors seemed to shrug off concerns about rising inflation and focused on the signs of economic recovery. The strong performance of the consumer discretionary sector, driven by robust retail sales and increased consumer spending, further fueled the market's upward momentum. The market's positive trajectory took a sharp turn on Thursday, following President Trump's unexpected announcement of a 25% tariff on all imported cars. This move, effective April 2nd, sent shockwaves through Wall Street and immediately dampened investor sentiment. The tariffs, aimed at pressuring China into a more favorable TikTok deal, were seen as a potential threat to global trade and economic growth. The auto industry was among the hardest hit by the tariff news. Shares of major automakers already grappling with supply chain disruptions and chip shortages tumbled on the announcement. The broader market also reacted negatively, with all three major indices closing in the red on Thursday. The tariff announcement highlighted the uncertainty surrounding trade policy and its potential impact on the market. Investors already grappling with inflationary pressures and rising interest rates were caught off guard by the sudden shift in trade rhetoric. This unexpected development served as a stark reminder of the geopolitical risks that can quickly upend market sentiment. While the tariff news cast a shadow over the broader market, certain sectors showed resilience. The consumer discretionary sector emerged as a clear winner, driven by strong consumer spending. Tesla stood out with a remarkable 12% surge in its stock price. However, the technology sector faced headwinds. GameStop experienced a dramatic plunge of over 24.5%. Despite the market volatility, several economic indicators pointed towards a continued economic recovery. The U.S. economy grew at a revised annualized rate of 2.4% in the fourth quarter of 2024, up from the initial estimate of 2.2%. This upward revision signaled stronger than expected consumer spending and business investment. Furthermore, initial jobless claims for the week came in at 224,000, close to economists' forecasts and suggesting a tightening labor market. This data point, coupled with the strong GDP numbers, indicated that the economic recovery remained on track despite inflationary pressures and geopolitical uncertainties. Despite the positive economic backdrop, investor sentiment remained somewhat cautious. The unexpected tariff announcement by President Trump injected a dose of uncertainty into the market, leading some investors to adopt a wait-and-see approach. Nonetheless, the underlying economic fundamentals remained solid, suggesting that the market's long-term upward trajectory remained intact.